Some of you might be uncomfortable with the idea of parking money in mutual funds, and that's perfectly fine. You would generally gravitate towards fixed deposits. But the question that I'm asking today is, should you go for savings bank accounts, and these are your regular accounts, in banks that are offering you significantly higher than your large frontline banks like ICICI or HDFC Bank or SBI even. In fact, I was looking at a list, a colleague helped me compile it, and you have someone like an IDFC First Bank, which on deposits of 10 lakh to 20 lakh in your savings bank account, which admittedly is a large amount, gives you 6.5%, which is a pretty substantial amount. So let's ask what your strategy should be in a low interest rate environment as we're experiencing right now. We're joined by Dilshad Bilimoria, who's Managing Director and Chief Financial Planner of Dilshad Consultants Private Limited. Dilshad, thanks so much for taking the time. And let me ask you this. What is your opinion on these high interest rate bearing savings bank accounts in these smaller private sector banks and small finance banks?
Yeah, so definitely I think one needs to look at the credibility, the asset liability ratios and the liquidity of these banks. Sometimes what is out of the ordinary could be a dangerous situation as well. So especially if it's cooperative banks, etc., I think those are things that one needs to consider in terms of what is the promoter background, and because we've had in the past, right, instances where misuse of funds or misappropriation of funds or usage of funds for loans, etc. So as long as you have the ratios of the bank balance sheet, I think that is an indication for you to take a step in that direction and invest in such options. Yeah.
But Dilshad, from the perspective of the average Indian, right, they're not going to go into balance sheets and all of that. So from that perspective, you're looking at banks that are pretty well known. I'm talking about IDFC First Bank, RBL Bank, DCB Bank, Bandhan Bank, IndusInd Bank. These are listed entities, and even in the small finance bank space, you're talking about Equitas, you're talking about Suryodaya, or you're talking about Ujjivan or Utkarsh. They're relatively well known from that perspective, right? We're not talking about your regional rural banks or commercial or scheduled commercial banks or thereabouts, right? So what should the approach be here if you were to, for example, park your emergency fund here rather than a liquid fund?
Yeah. So I would suggest, Alex, between 6 to 12 months, of your emergency monies can be, locked in here. Definitely these banks are giving these benefits, but they come with certain caveats, right? So some of the banks like IDFC and Equitas, etc., they say that you need to keep a minimum balance of above 50 lakhs or a crore at any point in time. Further, you cannot make withdrawals beyond a certain frequency at certain intervals. So like I said, it also depends on the bank's borrowing, lending and their liquidity requirements. So as long as the minimum restrictions and the caveats are, kept in bay, I think that should be fine. And further, it's important for every investor to understand that the credit bank guarantee scheme offers up to only 5 lakhs as in case there is a kind of a fraud, or and we've seen this in the past, right? So it's just important that investors just don't blindly go with higher interest rates because they're being offered. I think due diligence also has to be taken, and generally when the interest rate scenario today in the industry is declining, there have been 5 rate cuts that have happened. So I think these are factors that investors need to look at before deciding on what is the bank offering.
Sure.
It cannot be figured just like that.
So that is exactly why I'm asking, Dilshad. Would you therefore, rather than parking money in a fixed deposit, which you might have to lock for 3 years or 5 years, considering that we're close to, if not at the bottom of the interest rate cycle, park money here instead? That was the question.
Yeah. So you definitely can look at that. In fact, there are these quasi FD schemes also, which actually might give you better rates than normal savings bank, because that works better for the liquidity requirements of the bank. So how it works is that, say your normal savings bank account holds a certain amount, you can say anything above that a limit, and you can set a limit of 5 lakhs, 10 lakhs, as you deem fit, and tell that you would want that extra money to go into a sweep-in option, which gives you a higher rate, as high as 8%, depending on which bank that you're choosing, 8 to 9%, and then sweep it back. So of course now some savings banks are even offering between 6 to 8% on their savings rates. So as long as the bank is kind of well established and fundamentally strong, etc., I think it should not be a problem to park between 6 to 12 months of one's liquid needs in that.
Okay, so bear in mind that what Dilshad is speaking about is the sweep-in facility that is offered by several banks. So in case you want details of that, you should contact your bank to do this. Now, from an operational standpoint, and this is just hypotheticals, of course, Dilshad, that I'm asking you about, but it bears in mind that you have to speak about this at some point. You have to plan for it. It was actually pointed out by one of our viewers itself, who said that he keeps a large amount of money in his bank account and has his partner have access to it, because he himself had a situation where he was not able to access funds and he had a medical emergency. So is that a good reason to have a decent amount of money lying in your savings bank account?
So again, this comes back to the point of maintaining the emergency reserve. And today, Alex, there are so many options to take care of, emergency or liquidity requirements. Even your credit card is accessible immediately. Yes, it's important that you give the access credentials to your partner as well, because in emergencies, when the main person is not able to kind of take action or decisions on certain immediate liquidity requirements, yes, you need to have somebody who has access to this. So like I said, it falls under the emergency net that one can keep in the bank.
Okay. Now, I began by talking about looking at savings bank accounts and fixed income investments outside of mutual funds. But would you say that in this current scenario, where we have interest rates where they are, that this is actually an opportune time to look at arbitrage funds, particularly if you have an outlook of more than 6 months, and if you intend to hold for more than 1 year indefinitely, because then long-term capital gains tax equity comes into play as well. So tax-wise as well as opportunity cost-wise, it's a better instrument to consider.
Most definitely. So like you rightly said, anything between 1 month to 1 year, an arbitrage would be the best kind of investment option, considering, and it's safe as well, right? So it has the safety of a debt fund or a fixed income, and it has the taxation of equity, which makes it a very interesting proposition, provided the time horizon is maintained. There are newer interesting investment options like the SIF, etc., but those have to be looked at both from the risk profile and the time horizon of at least 18 to 30 months as the investor requirements. And mind you, these are also suitable for between balanced and conservative risk profiles, provided the investor is clearly aware of the various strategies that the fund manager is using.
Fantastic. Actually, that explains it very well. Dilshad, thanks so much for taking the time, and pleasure speaking with you as always, and wish you all the best in 2026.
Thank you, likewise. Thank
all right.
you.
Well, we've kind of tried to give you perspective. Just because a financial institution is offering you a great rate of interest doesn't mean you need to rush after it. So make sure that it fits within your overarching framework of risk and reward. That brings us to the end of this edition of Your Money Matters. Thanks so much for tuning in. This is NDTV Profit.